Why exactly did the M-Akiba bond that was launched in 2017 fail to reach the target of $10 million?
No, thank you. Thank you, Mugisha. Maybe a bit of a brief background about the M-Akiba product. This is the first bond that has been issued on mobile phones, globally. And it did actually have a bit of success. We had a registration from 45 out of 47 Kenyan counties. There were 400,000 investors who registered for the product. And out of a potential population of about 30 million Kenyans who have access to mobile money. However, the transmission from registration to investment was a bit low. And out of the target that was set for the issuance, we only had about 8% coming through. And there are a number of reasons why that didn't happen. And actually, that's the purpose of why FSD Africa, together with the partners, the National Treasury in Kenya and the Central Bank of Kenya, commissioned a study to find out why a very big percentage of those investors who registered did not actually end up investing in the bond. And the number of reasons that were discovered in the study, partly including the timing of the issuance, the customer journey that could have been improved over a period of time to ensure that the investors who were targeted for registration subsequently ended up investing.
Mr. Evans, another thing that we would like to definitely look at is that, yes, we do see Kenya as one of the most financially included countries in Africa, but also in the world, with the likes of M-Pesa handling the biggest transactions in the world. Now, we would have expected much on the back of M-Akiba, since now mobile penetration in Kenya is at the highest rate ever, and understanding of how this works would have been much easier. So tell me, why exactly do you see that there was a very low participation, even after you recorded so many people registered on the platform?
Yeah, so we must appreciate that this was a new product, so issues of financial literacy are very important, especially for a capital market-related instrument. But having said that, I think the product gave us a very strong opportunity to democratize government securities by making them available to a very large segment of the population here in Kenya. As I said, a potential of up to 30 million Kenyans had access to this. Now, eventually, if you look at the people who invested, about 85% of them had never invested in a treasury bond before or any government security. And I think that was quite interesting. Registrations came out from 45 out of 47 of the counties here in Kenya. There were quite a number of women who actually registered and they participated. I think up to 36% of the women invested in the security and actually invested, and that was actually a slightly higher percentage of transition from registration to investment from the women that we saw. But in terms of the eventual takeout, I think we saw a lot of the more educated Kenyans who had a more regular income investing compared to people who are based in the rural areas. That is expected for a new product. And I believe the findings that we have from the study in terms of how to improve the product will be able to reach those segments of the population that were initially targeted during the pilot as well as the launch of the first M-Akiba product.
Evans, when you look at the total uptake in at least 3 months for the M-Akiba, it was about 300,000, the same as Safaricom when it just came up. So would you say that $10 million was maybe just a bit of a higher target, or would you say you just needed a little more time to actually finesse this?
Okay, so yes, I mean, maybe the amount was a little bit higher, but let me just also put it a little bit in perspective. If you look at the government of Kenya has been issuing securities, treasury bills and bonds for a long period of time.
Definitely.
Now, if you look at the investor composition, we only have about 2% of the holdings of government securities today held by individuals through the conventional means. That translates to about 10 or 20,000 investors. Now, through the M-Akiba bond project, the central bank or the National Treasury was able to reach up to 400,000 potential investors. That's a huge change from 20,000 that are already existing and actively investing. So I'm just looking at it more in terms of what kind of potential this product has, and how can it be meant to achieve and realize its full potential.
All right, Evans, finally, one last question that I have for you has to do with, yes, you are targeting $10 million, but it rose just about a quarter of this. And you did mention that this actually opened up new potential investors for government bonds. So moving forward, what needs to be done better for more mobile delivered securities in Africa?
Okay, so a number of things need to be done to improve the product going forward. First of all is the issue of timing. And I think there have been discussions around if you're targeting investors who don't have a regular income, can you time the issue around when they get money from the sale of their crops or their animals, so they have liquidity to actually invest in the bond. So that's one. The other one is how you simplify the customer journey so that it becomes an easy and seamless process to actually invest in the bond. And then the other one is around reducing the cost of reaching these market segments, doing a lot more work. I think more work can be done in terms of marketing, improving financial literacy, explaining the feature of the bond so that investors can actually understand what they're investing in. So if we do those minor improvements, and I think the study indicates that there were no fundamental flaws in terms of the product and the process itself, but there were a few minor glitches that can be fixed very easily, and then the bond can actually achieve much greater success. And then finally is having a bond or a security that has a relatively shorter tenor, so that the need to have a secondary market for that security becomes less and less.